This is exactly why Zomato stock has taken such a massive beating in the stock market. Hello everyone. Take a look at the Zomato stock market returns on your screen. For the past 1 month, Zomato gave a negative 28% returns to its investors. For the past 6 months, these returns were a negative 61%. Imagine this, 61% of the investors' wealth wiped out in a matter of just 6 months. In fact, Zomato stock is currently trading in the range of 55 to 60 rupees, which is around 25% below its issue price of 76 rupees. Why is all of that happening? So if you are someone who is interested in understanding the reason behind the same, please watch this video till the very end. I will be telling you the reasons for such a massive downfall of Zomato. What is the exact business model of Zomato, which will probably answer your first question as well. What could be the future projection for Zomato stock, and most importantly, if you're an investor, what could be the road ahead for you. So without any delay, let's begin. Before we talk about the stock price performance of Zomato, let us talk about the most important business of Zomato, which is their food delivery business. So here Zomato deals with three major stakeholders. First, the customers, people like you and people like me who end up placing an order via the Zomato app. The second stakeholder is the restaurant who service the orders that are placed by the customers. And the third and the final stakeholder is the delivery agent, people who end up shipping and transferring the order from the restaurant to the customer's address. These are the three major stakeholders that Zomato has to deal with. Now let us understand the economics and the transfer of money in a single transaction that happens when a customer places an order. Okay, so the customer places an order and gives the amount of the food to Zomato. So he will order something and pays the amount for the food to Zomato. What is Zomato going to do? Zomato will deduct the commission amount from the entire amount that the customer has paid and will pass on the remaining amount, which is food price minus the commission amount, to the restaurant. The second component of the amount that the customer will pay to Zomato is the packaging fees. Here Zomato will say, okay, this is the cost that is incurred by the restaurant in packaging the order. So let me pass the entire amount to the restaurant itself. The third component that the customer is going to pay Zomato is the delivery fees. Zomato will again transfer the entire amount to the delivery agent, because this will be the cost that is incurred by the delivery agent in servicing that order. The fourth and the final fees that the customer will pay is any tip involved in the service of that order. So that tip is again transferred directly from Zomato to the delivery agents. Now try and understand this entire visualization that you see on the screen. What is the amount that Zomato makes for every order that is placed on its app? You will realize that it's the commission part of the food price that Zomato is going to earn from one order that is placed on its app. How much amount does the restaurant earn? This is the food price minus commission, which is given from the customer via Zomato, and the second is the packaging fees. If you talk about the delivery agents, they earn the delivery fees and they earn any tips that are given by the customers. Now that we have a basic idea of the entire business model of Zomato, let us come to the most burning question that every investor of Zomato has: the path towards profitability. Will Zomato become profitable? Let's find that out in the next segment. Now, very few people know this, but Zomato has been a profitable company from the time it was listed in the stock market. Confused? Okay, hear me out. Zomato has been profitable at an order level, not at a company level. What do I mean by that? If you include the revenue that they make for every order and subtract the costs from those. Which all costs? The delivery costs, the costs associated with those extra discounts, and all the other cost components that are associated specifically with that order. If you remove those costs from the revenue, Zomato has a profit of 23 rupees for every order that is placed on their app. Now, if you include all the other company related costs and expenses, such as salary of the employees, such as tech costs, such as any consultancy costs, it is at that point of time that Zomato goes into losses and massive losses. So the unit economics, which means the transactions at an order level, do make sense for Zomato, and they have been making sense from the time it was listed in the stock market. But now the market has been treating Zomato's stock very harshly, and the stock has come down by almost 25% from its listing price of 76 rupees. There were a good and a reasonable expectations in the market that yes, because Zomato is already profitable at an order level, you will see the shift towards profitability at a company level as well. But it has been close to a year that Zomato has been listed in the market. But that shift, that gradual transition has not been seen yet. So the major thing that is lacking in Zomato's business as of now is not profitability, but a clear path and a clear guideline towards profitability. And it is exactly because of this that the market, is concerned about its future prospects. Let us now discuss the major roadblocks that the company is likely to face on their path towards profitability. In its path towards profitability, Zomato has two options. Either it increases its revenue up without any increase in its cost, or it brings its cost components significantly down. Let us now try to tackle each of these components one by one. If we talk about the revenue, it can further be broken into two components. First is the average order value, which is what is the average amount that a customer is ready to pay or is currently paying for an order that is placed on Zomato, multiplied by the number of orders. So if I multiply the average order value with the total number of orders, I will get the revenue. And to increase its revenue, Zomato can either focus on increasing the average order value or an increase in the number of orders. If we talk about the average order value first, again, there are two ways in which this component can go up without any additional increase in the cost. First, the customers can start ordering multiple items, more items, or they start ordering items that are expensive, that are pricey in nature. This will make sure that the average order value will go up. And the second part to this is Zomato reduces its discounts substantially so that the effective amount that the customer is paying automatically becomes higher, and therefore average order value will also be going up. Now try to think about both these prospects one by one. The first one, do you think there is going to be an overnight change in the buying behavior, in the ordering behavior of the customer? Will they suddenly start ordering multiple or more items? Will they suddenly start ordering items that are more expensive in nature? Absolutely not. Let us now come to the second point. Do you think that if Zomato significantly scales back its discounts, customers will still stick to its platform? Is the customer loyalty that high that they will not migrate to a Swiggy, which maybe is offering a decent enough discount for the customer? I do believe that this industry is still heavily dominated by discounts, and customers are likely to flock to the other player in the market if the discounts given by Zomato go down. So Zomato will face a huge challenge in driving the average order value up to boost its revenue. Let's now see if something can be done on the total number of orders front. There are two components to this. Either Zomato starts to expand into cities where Zomato is currently not operational, or it starts to get more number of orders in the cities, in the areas where it is already operational. My point here is that both of these require additional costs. The first one requires significant additional investments, and the second one will still involve all the costs that will be needed to service those orders. So effectively, my revenue is going up with my costs also going up. So my profitability will still be a concern if either of these aspects happen. So to boost its revenue, the best case for Zomato is to increase its average order value, but the two cases that I just presented to you will continue to pose a challenge for Zomato in the short term. Let us now talk about the costs component. Can they reduce its costs substantially down to an extent that the revenue, even if doesn't increase by a lot, the overall revenue minus costs, which is the profit, becomes high? Let's now understand in terms of the cost component, what all expenses does Zomato bear. Zomato incurs significant marketing costs, significant tech costs over and above the people's cost related to salary. This is over and above what are the operational expenditures for one particular order. Given the kind of business that Zomato is in, given the kind of trend that Zomato has established, it might find a little difficult to bring down the costs component as well. But overall, these are the major challenges that Zomato is going to face when it comes to their path towards profitability. And the expectation of the market is that there should be a clear plan, clear roadmap towards profitability, which it has not seen till now. And that is exactly why the market is treating its stock in such a harsh manner. Obviously, there are external factors as well. We are currently in that phase of a market where there has been a significant correction in almost all the stocks. So Zomato has been no different in that regard. But it becomes absolutely important for Zomato's management to come up with a path towards profitability, even if that takes a couple of quarters or even a few years. But it's important that the street is aware that there is such a plan in place. Alright, let us now discuss about the future prospects of Zomato. And if you are an investor in Zomato stock, let's find out what could the future hold for you. Zomato has significantly corrected from its highs of 150 to 155 rupees. Currently, it is trending in the range of 55 to 60 rupees, a significant destruction of wealth from its all-time high, from its listing price and from its issue price as well. If you are an investor who is wondering whether to enter into this stock or not, it might be a risky proposition for you given the kind of wealth destruction that this stock has seen. But if you are someone who is comfortable to take that additional risk and the volatility that comes with this stock, you can definitely take at these levels of 55 to 60 rupees. Having said that, it becomes absolutely important that you focus on what the management commentary is in each of their quarterly results. It will give a very clear indication of where Zomato is headed in terms of its profitability component. Are there enough signs? Are there enough indicators that Zomato has a plan in place to move towards profitability? If yes, I do expect a sharp recovery from here on. But if there is no plan towards profitability, this stock can further deteriorate from here on. So please invest in this stock after doing a thorough due diligence on your part. Consult your financial advisor and only invest here if you're comfortable with that additional risk. Alright, that's it from my end. I hope you enjoyed the video. Do subscribe to Finance Lens and I'll see you the next time.